Good morning. Hey, what's up? This is Brian Kuzmar with Commercial Rare Coins and Precious Metals in Lauderdale by the Sea. I have got the old beach cam up that I used for a long time before I started putting on the fish cams mostly. This is the Lauderdale by the Sea pair live cam, and it's on the Earth Cam site, and I believe the Windjammer hosts this. It's in town. My business is if you walk down this pier, don't walk that way. walk off a long pier. Walk this way and you keep going this way onto the street, and about 2 blocks down west, actually, I'm on the right hand side. That's my shop, Commercial Rare Coins and Precious Metals. It looks like a lovely day out there too. Water clarity is just wonderful. Windjammer. By the way, they have a nice little hotel and beach club there if you ever want to visit Florida. It's kind of a cool little place, very quaint, I should say. Nice people, too. I've met them before. Let's refresh the market here. Kind of sucks a little bit today, but not in a big deal. Just a good buying opportunity. Everything, when I say sucks, I like something happening. Up, down. I like some excitement either way. You know, the downs provide good opportunities to buy the dips and just let you know that the market's healthy. And the ups, the same thing. You're always happy to see ups. Who isn't? Unless you're not fully bought in yet. And I know there's some people out there saying, oh, I wish silver would go down some more. I feel you, brother. So I know exactly what you're talking about. Let me do a quick refresh here. I've got a new browser here only because my Safari was eating up so much memory. I think I was mentioning that to you yesterday. And let's do a quick refresh. Yeah, it's, again, sideways kind of. Silver 21.75. Woo, boy, got kicked below that $22 mark. Again, great buying opportunity. Down 73 cents. Platinum 9.50. Palladium up a couple bucks, and gold at 1737.67. It just seems to be a general malaise out there. I think that's the proper word to use. Just quiet nothingness. Markets across the board. It's like what's that? Oh man, Dr. Zeus book called. Here, I'm going to type it in here. I think it's called The Waiting Place. The Waiting Place. Many of you that have kids probably have read Dr. Zeus books. At least my generation has. The Waiting Place. And what is the waiting place? So you're just waiting for shit to happen. And that's kind of, look, the waiting place. There we go. That's where we're sitting with precious metals for quite some time. It just seems though the whole market, not just precious metals now, equities markets, the economy, the politics, we seem to be in what we call the waiting place right now, waiting to see what the idiots do, waiting to see what well, anyways, don't want to go there, but kind of a little analogy here that I have. We're in the waiting place right now, folks. I think the whole world is in the waiting place. We've been put in weird situations for the last couple years now, and it's just a strange time. Let's take a look at markets. 1737, 1734 to 1746. The high sitting right in between there. In silver, the real game today, 21.69 a low, 22.57 the high, and currently sitting at 21.75. And platinum, 9.54, 9.75, $25 range there. Again, don't worry about it. I don't think anyone's planning on selling right now. If you have the opportunity to buy the dip, fine. If not, just take a vacation. In fact, I'm going to take a couple days off. I haven't done it in over a year. I'm going to be local doing it. However, I'll still get this video done. I'll do it maybe a little short report on Friday, Monday, Tuesday, and I think Wednesday as well. Just depends on how it goes. So I'll do a little short report, probably like a voice report, and send it to Marcelo and let him edit it and throw it up. So it won't be as in-depth. So forgive me if I'm going to take a break for a few days. But I'll still get these reports done, even if they're short. Well, let's move along to a couple things I'm going to talk about. Misery index I want to talk about. I want to compare it to the gold price chart here, which we're going to look at in a little bit, and we're going to talk about some news and yesterday's video. But first, my screenshot. I don't know why I feel it important to let you folks know that I've kind of Brian's got his own little device here, how I view people nowadays. And I view them in three kinds. I view people, governments, and corporations three different types of ways. There's the predators out there, who I believe those who benefit from stealing others' money, power, and rights using legal theft and or ordinary theft. I think we can pretty much safely say that this follows the political class right now. Has become political class used to be this down here. And let me get to this one. Parasites, those who live off others' money, power, and rights by living off the production of people who produce goods and services and the hardworking people that make that happen. And again, don't confuse that with voluntary charity, folks. It's a big difference here. Parasites are people that just purposely purposely live off others. And again, that can be people, governments, corporation. It can be all kinds of entities. And then you've got your producers. Again, these three kinds of people: governments and corporations. You get your producers out here, and those are productive citizens and entities that produce wealth via goods and services, mostly small business people and the working class. Although there's some big corporations out there I would consider producers, not parasites nor predators. And when I say that they produce goods and services without relying on government to get the job done, without relying on regulation to get the job done, or make sure that their product is the only one used, or making sure. That's being predatory. Is if you own a business and you get the government to help you get rid of other businesses, or you get the government to help you make your business better, that would be considered parasitic and predatory, in my opinion. And most small business people and the working class man out there are producers. We're producers, folks. And unfortunately, there's always been predators and parasites in our life, but they seem to be far more prevalent right now. And again, I believe the political class has turned from parasitic to predatory across the entire world. So there's a dual. You can apply both of those terms to the political class, in my opinion. And the economic class has become more predatory. The economic class used to be the producers in the world. Even the big corporations produce stuff. JP, or what does JP produce? Newspapers or railroads or something like that, whatever, back in the day. Now these big corporations have become parasites and predators as well. So, us producers are becoming far and far fewer out there. There's more and more people looking to be parasitic and predatory with us and the working class, us small business people in the working class. But at some point, what do they call that when you step on your own wee-wee? That's exactly what these predators and parasites are going to do. They're going to step on their own wee-wees. What they're going to realize is that the producer class, and you're already somewhat seeing it with the working class, not wanting to go back to jobs that just pay shit. I'm sorry, it's true though. And again, it's really not the fault of small businesses and that the hourly wage is not where it should be. It's because the parasites and predators of government and their crony corporations have made it even more difficult to produce a profit. Again, the fault of parasites and predators. But in future shows, I'm going to refer to people, entities, and corporations, etc., as either predators, parasites, producers, and or both a little bit. Let's move along to gata.org, where New York Sun, the fall guys for the dollar. It was interesting to see something in the New York Sun about the Fed. And let's take a read on that real quick. And this is gata.org in case you're not familiar with it. And most of you that watch my show are, and probably are tired of me saying that. So let's take a look at the article. Fall guy for the dollar. I'm going to read this because it's not too long. And then, as I said, we'll get into the misery index, comparing that with gold and silver prices. I got that over here. Executive Order 6102, which was requiring people to turn in their gold and silver. But let's read this one real quick because, again, economics and politics, as boring or as crazy and distasteful as it may seem sometimes, it really ties into exactly what we're doing here with gold and silver. Because if economic times are bad, political times are bad, this is typically a good time for precious metals. Let me read this real quick. And again, this is in the Sun, New York Sun. Kind of interesting to see this here. I'm going to blow that up a little bit. Fall guys for the dollar. The big news of the day is the resignation of the presidents of the two regional Federal Reserve banks. I'm going to contempt over their trading. What is that word? That's a new one for me. Trading for their own accounts. Eric Rosingen. All right, we won't go into the details. The article says here, good luck to both of them. We say we don't mind confessing that we lack a sense of whether their trading broke any regulations. And again, this may be true. Don't forget we're living in a woke type of world where you don't have to do anything wrong to be shut off, cut down, or put in jail, or just put in social jail. You don't have to do anything wrong. You don't have to be incorrect. All they got to do is say it and then pile on you. pile on top of it. But these guys may not have broken any laws, as they point out here. But the article says it's hard to imagine, though, that whatever they did amounts to more than a hill of beans, a fly speck, compared to the havoc that the rest of the custodians of our monetary system have wreaked in the past generation. Whoa, pretty heavy for a somewhat corporate news. Again, I don't know how big the sun is, but I know they've been out there for a while. Since the start of 2001, the value of the $1 Federal Reserve note has fallen 84%, by which we mean that on the open market, the value of the dollar, the Fed's most famous marker, has plunged to, at last check, less than 1,735th of an ounce of gold from the 265th of an ounce of gold that the dollar would fetch on January 20, 2001, when George W. Bush was sworn in as president. The Fed's brass doesn't seem alarmed, but we're in the camp that sees the dollar at current values as anything but normal. Well, the current brass doesn't see it. The Fed's brass doesn't see it. They see everything wrong, the folks, and that's the assumption that a lot of people, mistaken assumption that people make, that these people at the Fed are stupid. They're not. They're on a sinking ship. They know it, and they are doing everything they can to keep that ship afloat, or at least keep people believing that it's still floating, even though they're up there, their neck in waters. That's what the Fed's job is. They're not stupid, folks. They're just spinning it and jawboning it, as we've been saying for a long time. Who's going to resign to take responsibility for that? Taking responsibility for killing the dollar? Not Jerome Powell, it seems. On his watch, the dollar has so far shed 23.8% of its value in terms of gold, a constitutional specie. The other is silver, obviously. Nor, for that matter, will Janet Yellen, under whom the dollar shed more than 5% of its value. Nor did Ben Bernanke, whom the greenback lost a staggering 53% of its value. And under Greenspan, it was down 19% in gold. We understand that the current Federal Reserve is not entirely to blame for this sorry record. One would have to go back to William McChesney Martin, after all, that's a long time, to find a Federal Reserve chairman under whom the dollar fetched a 35th of an ounce of gold throughout his term. Even on his watch, though, the great inflation set in. The real responsibility rests with Congress, to which the Constitution grants the monetary powers. Oh, boy. God, I hate to grant Congress anything. What a group of clowns that is. I'm sorry to say it, but it's true. It was Congress. That's why I don't have any faith that these clowns are going to fix anything right now. I digress, though. It was Congress that in the 1970s legislated the system of fiat money and ratified the revision of the International Monetary Fund Treaty that actually prohibited member countries from defining their currencies in terms of gold. The fiat system turns out to invite or even depend on vast hedging designed to outfox the vicissitudes of the markets and the vast amounts of electronic paper ticket money washing around the globe, and has led to the current crisis. It's crisis in which Congress, with inflation starting to eat at our currency, is trying to force through trillions of dollars in new that's what I said. These people. Now, when I say bankers, people say, "Oh, these bankers are idiots." Fed Central Bank, they're not idiots. They're very, very intelligent, very smart. The real idiots are the people running the country. Anyway, and has led us to the current crisis. And this is a crisis in which Congress, with inflation eating at our currency, is trying to force through trillions of dollars in new tax and spending, while at the same time turning itself inside out over whether to raise the debt limit or default. Who imagines that the furies driving the crisis will be appeased by the two Federal Reserve banks being cast out on the storm? But interesting to see this in what I would consider kind of a corporate paper a little bit. Maybe not. Maybe it's just a small paper, but pretty cool. And it kind of, it says it like it is, more or less. The Congress is the real issue here, and that ain't going to get fixed anytime. Not too much to talk, but I was looking for some precious metals articles in ZH here. Let's see. Again, not too much news out there. Just everything's kind of sideways down a little bit. Not death, but dropping by 1,000 cuts. That's what's happening right now. I'm going to get over to the charts here. I don't even want to talk about too much more news. It's just kind of disgusting. Let's get into the U.S. misery chart here, which I wanted to compare to gold prices here. First, here's the macro trends gold price 100-year chart. I'm going to take a sip of coffee real quick. I have turned off the inflation-adjusted period here. If you do inflation-adjusted, remember gold was officially, before 1930s, gold was officially set at $20 an ounce because we were on a gold standard. And as you can see here, I don't even know what this means, where they get those prices, 521, where is that? probably starts in 1915. There you go, 521, 283, 300. But let's turn off the inflation adjusted right here. And there you go. There's the official price of gold in what the terms of the dollars were at the time. Gold up until what? The Depression, 1933. And this is about when FDR, now let's go over to the misery index chart here. All right, take a look at this. This is gold sitting around, the official gold price is around 20 bucks an ounce. So, you know, a US $20 gold piece had about 20 bucks worth of gold in it. We were on the gold standard. I think things were actually running better at the time. And here is the Great Depression. Boom. This is actually when FDR, and let's go over here, and we're going to go down here. And there's Order 6102. I was going to talk about that. The 6102 is the order that FDR, during the Depression here, April 5th, 1933, put out 6102, making it illegal for citizens to own gold, officially kind of taking America off the gold standard. Not the rest of the world, but taking America off the gold standard. Made it illegal for Americans to own more than, I think, 5 ounces of gold or something like that. They were allowed to own certain types of gold, but again, he was taking America off the gold standard, or kind of in a way, while leaving the, still leaving the currency in a gold-backed state. Kind of a weird halfway there thing. It's weird that we were on the gold standard, but we weren't until Nixon took us off completely. But let's take a look at that chart. There's FDR right there. There's the Depression right about there. And then FDR made it illegal for people to own gold. So everybody turned in their gold for fiat, basically. Well, I guess it was still backed by gold, somewhat or something for other countries. But they turned in their gold, and all of a sudden, what did FDR do? He repriced the price of gold higher, which actually was good because we actually own gold in our vaults. I think Fort Knox became worth a lot more after FDR did that. Kind of a shitty move, though, making everybody turn in their gold at the $20 per ounce price, and then as soon as they all turn it in, you raise it to 35 without telling anyone either. So here you go, $35 is the price of gold, official price of gold for the long time with the United States. That's where FDR had reset it. Even though Americans couldn't own gold, other countries, France, Switzerland, all these countries could redeem their dollars for gold at the gold window until here. Again, this is where things start getting choppy. Until Nixon closes the gold window entirely. Nixon's famous word, we're all Keynesians now. Look, this is exactly when we went on to the fiat standard entirely. Look at the price of gold. Again, this is not inflation adjusted. Again, if I put inflation adjusted here, look how that chart changes dramatically. Okay, so let's just kind of turn that off real quick because this tells the real tale of the time. And again, we don't need to know inflation adjusted. We already know how awful inflation is. And you can look at this unadjusted chart and look at these prices just to know what inflation has done in the terms of the price of gold. So let's take a look at this market right here. This is where Nixon took us off the gold standard right here, and look what immediately started to happen. Now, this is until 1974. Now, let's go up to the misery index. This is pretty cool. Let's go to Kennedy, and then let's go to Johnson. As you can see, the misery index is sitting around 7, 6, thereabouts. Now, don't forget, we're kind of in Vietnam at the time, and I believe we were starting to spend a lot of money on our war adventures, Vietnam, Korea, and one of the reasons that other countries started asking for their money back is because we were starting to break the Bretton Woods Agreement. We were spending more, we were printing more, we weren't holding up to our agreement as a world currency, even though we were still backing it by gold. But take a look at the misery index chart. Seems to be hovering in that 6 to 8 range with Kennedy, okay? A little bit of deviance here, not much. Then Johnson's through here, and again, remember, these are the Vietnam War era, 66. This is when the wars start heating up. We're starting to spend more money, and countries are putting a lot of pressure on the United States for not keeping up. So there's a lot of stuff going on here. We had quite a few good years after the war. Again, some fluctuations up to that 8 period range. What happened in 1958? That kind of ran it up a little bit. It probably has something to do with the war. I'm sure all these up and downs you can correlate with specific events in our history, whether it's economic or political. And as we go down here, it looks like Johnson's kind of sitting in that 6 to 8 range. But down here, it starts to go up back up to 8. Nixon, here you go. Nixon, the guy that took it. And again, we're going through Vietnam. Everything's still not awful, but Vietnam's getting a little more expensive. The country's getting a little more tense with riots and the flower movement and all that stuff, the anti-war movement of the time. But here comes Nixon right here. He's kind of fluttering in that 7 to 8 range. 69, and all of a sudden we're getting up here. This is mostly economic, folks, but look what happens after Nixon takes us off the gold standard. 71, 72. It seems that it kind of backs off here for a little bit, as far as the heat comes off, and that probably is a direct result of Nixon took us off the gold standard. Now our country, well, they could print more money, and if they could print more money, basically that's what Nixon did. He was able to print more money, which provided a short-term kind of fix in the misery index. However, as we get back up to here, and again, this is about where he closes the gold window. Take a look at this. We're on a fiat standard at this point. It kind of continues through forward and the high in the $18 an ounce. Now, here's our first bull market in real. Well, not really. Let's take a look at our first bull market in gold. A lot of people think that the I'm going to put the inflation adjusted on just to make it more exaggerated. But this is when Nixon took us off the gold standard. Look at this one right here. This is the first real gold market that not a lot of people talk about because it was outshadowed by the 1980s market. Again, this is an inflation adjusted number. Don't use that. Let's go back to turning that off right here. So there's our first one right there. There's our first bull market in metals. That was 1974. That was shortly after Nixon took us off the gold standard. But look how fast that line rises up here on the price of gold right after Nixon takes us off the standard. So we get a little peak there in 1974. And then again, I think the effect of those extra dollars that they're able to print, it kind of kicks in and the economy starts to look a little tiny bit better, taking the pressure off the price of gold. But however, in 1976, everything changes again until 1980. Let's take a look at 76 through 80 and see if there's any correlation on the chart. Well, 76 through 80, it looks like the misery index, which is kind of odd. This is not what you would kind of expect, 76 through 80. As we go through 80 here, it's down a little bit from its height. And then here we go, 78, 80. There's the height of the gold market right there again, with the misery index at its highest. What doesn't make sense is interest rates also are at its highest, because a lot of people say, well, people are going to get out of gold and silver, when interest rates are paying, higher than real rates, or it makes sense, and it's not true, because back then interest rates were super high under Volcker. And CDs were like 8%, and people were still piling into gold until they monkey hammered the price of gold down. And trust me, folks, monkey hammering has been happening a long time, since the 1980s, probably earlier actually, but this is not anything new. They monkey hammered markets down, and kind of here we go. There's Reagan right there. And let's take a look at gold prices where 1980, I'm going to turn off, there's the inflation adjusted, and they've got it listed as $1,700 compared to, all right. 1980, gold was at a high of 800. I don't know where they get the 600. Gold was higher than that in 1980. It made the $800 range, so I don't know where the hell they get their numbers from on here. But no less, let's take a look at what's happened through 82 through 2001. And you got Reagan here, and look, the misery index starts to fall again. And when was our next bull market? This was not good markets for the price of precious metals. Let's take a look. I mean, not a terrible market, but really in that $250 to $300 range for the longest time. It didn't start to rise again until 2001. That was the beginning of the bull market for the second big, well, let's call it the third big bull, because we did have a bull market in 74, 1980, and again in starting in 2001, ending in 2012, and we're in another one now. But let's take a look at this time frame right here, from 82 to 2001, and see what the misery index looks like. And I suspect when we get up to 2001, I don't know what to expect right now, because this misery chart's all over the place. But again, some of it may have to do with political events happening as well, wars and all that stuff. All right, 82 to 2001. And here we go, up to 2001. Well, 2001 is about when we got into the war and we started spending more money, isn't it? You've got the Bush years, and again, look at the range. Bush was pretty much high up, but look how high that index is, the misery index here for George Bush. So we've got some issues going on, and all through 2001, it looks pretty insignificant here. So you would think the misery index would be higher when you started to see gold prices climbing, but not really. But as we get to 2020, I'm sorry, 2012, take a look at this. The misery index does rise quite substantially right before we hit that other peak in 2012. Again, I'm not sure what quite to make out of these correlations, but they seem to be pretty clear correlations between the two. There's your October 2011, 2012 market when gold was at its last high. It was 18 or 1900 or something like that. Again, I don't think these prices are real accurate here. And here you go. There's the height of the next gold market. And again, 2020, when we had our last market, look at the misery index. This is the stock market years. People were making money in real estate, housing. Of course, the misery index is going to be low here. You know, they were just pumping money into the system after 2008. There's our financial crisis, by the way. 2008, right there. Where's the financial crisis? Right around here. And actually, that was probably the start of the gold market when it was up into the $1,800 right here. Let's go down here to 2020 and take a look at our last. Look at this. Well, we know that was the year of the close downs and all this, but our third, or I should say our fourth bull market right here, March around 2012. Then our next one is going to be around 2020, as you can see right here. Let's take a look at 2020. Misery index up substantially. And why was I pointing out the misery index since then? Well, because there are some key, you can see a correlation between the rising in the misery index and the rising in the price of gold in a lot of these areas. And what I wanted to point out to you is, 2020, take a look at this, a little dip into, when Trump was in charge here. You got this little dip going right here, and then when the Biden administration takes charge, here we go again. It looks like it's rising. That's kind of backed off a little bit, but I have a feeling we're not done seeing the misery index go up here. And when was that done? The 8th month. Okay, so we still haven't got the new data in for this. So I found this kind of interesting, and this is all stuff you can look for yourself. You can have some fun with it. This is the misery index, and you can do it by year. You can index it by Congress even. That ought to be an interesting study and something. Oh God, it's taking a little while to load here. Let me see why. All right, let me go back one. And you can do it by rate by year, rate by month, raw data, index by index by month, index by year. A lot of cool stuff there. Same thing with macro trend charts, by the way. They have a 10-year chart by year, and again, by president chart too. So you can go and look at charts and kind of get an idea of where we've been and where it looks like we may be going here. And as from what I can see here, it looks like the trend is up overall. Higher highs, lower lows. Higher lows and higher highs is what we're seeing in precious metals markets ever since Nixon. If you look at the medium and long term, Executive 160, 102. We already talked about that. Let's kind of move into Reddit real quick, the Reddit group. For you folks out there that have been following me for some time, I'd recommend you go out here on Reddit and sign up. I know signing up for another group or something, but for those of you not in the Reddit group here, there's a lot of enthusiastic folks out here, and I'd like to see more and more seasoned people go out there and explaining things why paying high premiums is not a good idea. And again, I'd like to see this group even get bigger than it is right now. Let me see here. Where is the? Let me just click on that, and I think they have 130,000 subscribers right now. There's 700 of them online right now. And again, if you're buying gold or silver, and particularly silver, this is kind of a fun place to be. Highly recommend, if you're not part of the Wall Street Silver group, that you sign up for it. Well, let's take a look at yesterday's videos. I did the Money of Kings, which is, my titles. I'm trying to avoid the clickbait titles, folks. I've got to be quite frank with you. YouTube kind of rewards clickbait titles, and they really do. Maybe they don't reward them. Maybe that's what the vast market really wants, is clickbait titles. But you know, I see so many YouTube videos out there, and the popular ones always have that similar clickbaitish type title. I've been trying to keep my titles more, I don't know, kind of more true to what we're talking about during the video, as opposed to silver confiscation or silver climbs $6,000 in 2 weeks, or all those crazy titles that you see in a lot of precious metal videos that have a high view count. And again, I imagine they have a high view count, but a very low duration time that people are watching them, because the content, a lot of that stuff is really terrible. There is a few good content out there, but I've been avoiding the clickbait titles, and I think it kind of shows a little bit in my views, but no less. And it's funny too. I noticed that my some of the titles that I use, when I'm using titles that are talking about exactly what I'm talking about, and I have a low view count. My lowest view counts are usually what I consider my best content videos. So it's just the opposite of what I expect. I do these videos and I go, wow, man, I gave some good content on that one, and all of a sudden the view count will suck. And then there's videos where I talk to the guy that does my editing at the beginning and end, which is pretty simple because we run right through these. I said, "Oh man, my content was terrible today," and anyways, I'll get a high view count. I don't understand it, but usually it has a lot to do with the title. People like good titles. I don't know. Well, Money of Kings. Like the title or hate it, it's exactly what we talked about. Let me get over a few comments here. And then we'll kind of move along, and we're almost out of here. Last Living Cowboy, thanks for watching. You too. I'd like to thank all you folks for watching. If you won't ship coins, you at least ship us some of your bathwater. This one leaves me perplexed and maybe a bit frightened. I'm sorry, Alex. Please explain. Thanks. Meteorite Hunter. Oh, that's so cool. Meteorites and gemstones. Love that. NGC, thank you for watching. D-Man says, what would you recommend, 1 ounce or 2 kilos? And let me close my door here. Hang on. Oh, I told them not to bother me when I'm doing these videos, and they still do. Thanks for watching, all you folks. America Pride, and Bob Myers. Bob Myers says, if they go digital currency, what will happen to gold and silver, and can you use them? Well, I imagine you can buy gold and silver with digital currency, but I just hope we don't go to a cashless society. I think there's too many people out there that don't want to do that, and there's a whole segment of the population that can't operate on a digital kind of a cashless society. So hopefully we won't see it happen. Hopefully if they try to push it, there'll be major protest and it won't happen. Thanks for watching, Bob. Linda says in the UK, 20. Yeah, we were talking about that yesterday about the gas. I think they're creating these issues, these shortages. I really do. I think they're creating them to get people dependent. The parasites and the predators are creating these situations to get people dependent on them. So, if you're dependent on them, then you have to vote for them. So that's what I see going on here. Thanks for watching, Linda. The Rare Breed says, shall always be and always will be the Alpha and an Omega. Oh man, that confused me a little bit too. Gosh, my head's not really with it. So not sure what you're talking about in Omega, but thanks for watching. U2 Tree Climber and John Gore. Texas having its own gold reserve bank. Yes, I did. And I'm not quite sure what's going on with that, whether they exited that position, whether they still own that position. I also read that they had their own vault, which they're having issues with because they're really not using it. They had thought more people would use it. Different story, though. Thanks for watching, Johnny. I appreciate it. Joey says, you were right about the SmackDown times. When we sleep, they reap. That's true. Most of the hits I noticed are done. The big hits are done on the New York Globex markets in the middle of the night when no one else would possibly want to sell metal, or the only reason they would is if they wanted to lose a lot of money. So yeah, they're definitely manipulative takedowns for sure by parasites and predators. Thanks for watching, Joey. Silver Rose says, Canada makes it difficult to own gold. Last year, the Postal Service made it illegal to transport metals in the mail. That wouldn't surprise me. Canada is going to be, I think, if anywhere in North America we're going to see a cashless society, it's going to be Canada first, most likely. Again, that's just my opinion. And I was also surprised to see how little gold Canada owns. It's like next to nothing. I think it was 100 tons or something like that. But Canada doesn't own much gold in their vaults at all. So, they are definitely a fiat-driven system for sure. I guess we all are. Gritty says, "You've been, sir, I've been listening to you for some time. I don't BS. Yeah, I like to call it like it is. And some people don't like that. And, it shows up. It shows up in the thumbs down that I'll get occasionally. But no less, hey, the truth is, the truth is the truth. Hey, thanks for watching, Gritty. Appreciate it. Silver Rose, thanks for watching. Eric, please stop by if you're in my area. And Tree Climber, yeah, that sucks. Well, boy, these were some quick answers, but no less. Hey, thank you all for watching. I really appreciate it. If you're new to my videos, please hit the subscribe button. And if you've been watching my videos, it's always nice if you're a follower to hit that like button as well. Where is that? Right up there. I like to see that. It lets me know that people out there actually care what I'm saying. And thanks again, folks. Well, that's it. This is Brian Kuzmar with Commercial Ware, Coins, and Precious Metals in beautiful Lauderdale by the Sea. Call me anytime between 10 and 4 Mondays through Fridays. I'm a local dealer. I advertise to beat the big online sellers at MEX, JM, and SD on popular, reasonably priced bullion products. And we've got some great deals here, folks. We really do, especially with silver down. It's a good time to buy. So call us anytime between 10 and 4 Mondays through Fridays, and happy to help you out. Hey, thanks for watching, and we'll talk to you soon. Bye now.